What's up, guys? Today is December 12th. I'm Jamie with Property Bear, and let's get into what we're looking at this week. So, this week we have a busy economic news week. We have core CPI coming out Tuesday, Jerome Powell speaking Wednesday, jobless claims Thursday. Not much real estate news, but the CPI and Jerome Powell speaking tend to move the markets, and how people feel about their stock portfolios and their 401ks tends to impact how they invest or buy in real estate. So it doesn't stop the funds from doing what they do, but different conversation. So let's look into our mortgage rates. So instead of just pulling up the 10-year, mortgagenewsdaily.com is probably the best source for what the rate's going to be. I think the 10-year right now is at 3.5. So, adding three points of margin to that puts you at 6.5. This is at 6.38. I probably trust this more. And they publish this daily, which is probably safe. So, check that out to see where you're at with loan numbers. And there are people right now getting, 3, 2, 1 point buy downs on some of their new construction stuff. So people are moving in with their first year rate at 3.38 or 4.38, right? So if you're the smartest guy in the room, right, and you think that a recession is going to come, what happens with recessions generally? Generally, in recessions, they have to lower rates in order to re-stimulate the economy. Even though this is a self-inflicted recession, it is what it is. They're in a recession, they have to lower rates in order to stimulate the economy. So if you are into this house at 4.38 and then they lower the rates again by 2 points, you can refinance long-term into that 4.38. Food for thought. That's just how we see it. Projects. Let's look at our renovation. So we've got Harbor Cove. It's kind of like one of those things where it's like, no matter what the economy's doing, sometimes you just have a cool house that people don't care if the economy's good, bad, mortgage rates are high or low. They're just going to buy it. Harbor Cove is a sweet house, pool house over by Fort Caroline, big brick house. It's probably one of my favorite renovations we've done. We've got Sappho, 3-1 in Murray Hill. Great little house for Airbnb. I think it was like $165 was the projected nightly rate. And then we've got Matanzas. We're actually going to keep that one, so that one's not going to come available. Cool mid-century house in Arlington. If you watched our ugly home tour, that was that house. On the new construction side, let's start with everybody's favorite, Johnson Commons in La Villa. That's one of those things where it's like, no matter what's going on with the economy, people are still pumped about certain projects, and that's this one. Right, we've already kind of started insider reservations as far as like people associated with the builder and stuff like that. And then public reservations will start right after January. Before we do that, we will have a video going out explaining the building numbers and the units and like all of that stuff. But if you go to johnsoncommons904.com, you can see the location. You can sign up to get that information. And we have floor plans for the interior units and the exterior units. Carrie with the retail team is going to be heading, obviously all of those sales up. But it is a super cool project. We're super pumped about it. I can't really give you many more updates because we haven't gotten final pricing on it. We're still waiting on that. But that's kind of the last piece that we need to put everything together. So we also have Ellis Road. Ellis Road is a perfect build-to-rent product. Pretty much all of the finished packages for 2023 are perfect for build-to-rent. I don't know what's going to happen next year, but we might, on some of our communities, lift the 20% rule because it seems like retail buyers are being pretty heavily influenced by the news and headlines. So if they're not as interested, let's turn those communities into rentals. So Ellis Road is a great one. Those are the townhome duplexes. King's Landing, Same thing, granite countertops, vinyl plank or hard surface flooring. Um, we've got some 1748s in there. I don't know if we've put that video up for the 1748, but we just walked the 1748 last week, and it's an awesome floor plan. 4 bedroom, more rent out of the 4 bedrooms. But it's a great floor plan. I think we already changed it to move the stairwell to the front door to kind of add more living space. But again, everything in 2023 is perfect for build to rent. Obviously, it's perfect for entry level home buyers because that's what Breeze Homes is all about. Um, and yeah, so what do we go? Johnson Commons, Kings Landing, Ellis Road. If you want to see the 1748, we have Gillespie. That one should be done in January and move in ready. Um, but again, what we were just talking about with mortgage rates, we are seeing some people not paying attention to the headlines, and they're getting 4.5% rates right now for year one, right? Year two, then it adds a point, and then year three, it goes to that 6.38. But I don't have a crystal ball. I don't know what's going to happen in the next year. Mortgage rates could go up or they could go down. But either way, in year one, it's still lower. So, I mean, if you guys have watched these videos, you already know what I think is coming. Even on the investment side, like we can't find enough houses. So it's not like we're still having the inventory problem, and people are still going to want to buy these houses. And the second that the headlines read that interest rates are down, we're going to have this frenzy all over again. And when I say down, I'm talking about like in the fours or fives. And that's just what it is. And maybe that's just our market, right? Maybe in different markets it's different. Yeah, so what else do we have? Ellis Road, Kings Landing, Johnson Commons. We do have Kings Crossing in St. Augustine, but we have almost no information on that one yet. So once we get more, obviously, we'll let you know. So let's jump into the numbers. So median sales price, we've got 361. So prices are going up. Don't tell anyone. Might freak everybody out. But from a week to week basis, you've got a higher median price point at 361. I don't think I'm going to hit my prediction of down 10% from the highs by the end of the year. I don't think it's going to happen. I thought we would hit 10%, and I think we got like 7.8%, and I was like, you know what? I knew I was right. It is what it is. And then we shoot back up. Honestly, you kind of expect that with seasonality because less houses on the market pull in higher prices. That's just how it works. Let's go into closed sales. So that number is also up. You guys remember when we were in the 200s? Yeah, and it was like a little worrisome. So that came right back up. It probably has a lot to do with the fact that last week those rates came down. Again, not a lot of people are talking about that, but we went from the sevens from over 7 on I think a conventional 30-year to like 6.5. And what did we just see that one was at? 6.38. So, and again, people are taking advantage of buy downs right now. So, if you can get that, especially through new construction, do it. We're doing it on Breeze Homes. So, all right. Let's check this out. 56,000%, 97% percentage of list price received. That we're still getting closer to normal. Once we get to 92%, that's where I feel normal. I mean, it's been. Oh, this is 2021. Okay, percent of cash sales. Remember, we'll break down everything by price on the monthly. So on the weekly charts, we don't do that. So percentage of cash sales, did I miss this? September 24th, 50% of the closed sales were cash. That's crazy. So we're at 24%. So we usually hover around that 30% number. So right now we're at about 24%. And I guess if rates are going down, why would you pay cash? But here's the other thing. We know if you watch this video, that a lot of the cash sales are driven by hedge funds. And you guys also know the conversations that we've had with them saying, hey, January we're cranking back up, right? So end of year, they might be shutting down. They might be saying, hey, we're out for a while. Let's look into the next one, new pending sales. Yeah, so down and up, but it's obviously trending down. Again, it's interest rates, it's also inventory. I mean, let's go to median days on market. I would say if you're selling, it's still a good time to sell. It's just going to take a long time to sell right now compared to, I don't know, 10 years ago, not going to take a long time to sell. Compared to 6 months ago, takes a long time to sell. All right, so our active inventory still increasing, but it does look like it's flatlining. Now, keep this in mind. Active inventory, you also have to compare that to new inventory. And the reason that you're doing that is because you don't want to really confuse, oh, there's a lot of inventory and everyone's exiting, right? Because if you look back here, right, you've got 722 in January, right? And then right now you've got 775 this week. And yes, you've had ups, downs, in betweens, right? But basically what I'm saying is it's not like a whole bunch of people are coming to flood the market. They did at this point. October 15th, they definitely did. Lots of houses came to the market, and they probably wanted to beat the interest rate thing, but they're kind of behind, right? So I think that this is something more to look at than active inventory. Percentage of distressed units. $77,000%? No. So 0.4%. So still less than 1% of the listings on the market are distressed. So, and we can check out unsold listings. All right, so 353 sellers chose the wrong agent and cannot get their house sold because they're probably chasing the market. Unsold listings that were withdrawn, canceled, or expired. Yep. So that's this week, December 3rd. I would expect to see more of those come online after the new year. So when you're looking at new listings, right, don't be surprised if you do see a pretty dramatic influx of properties. We might hit this 1,000 number again that week after the first week. So big week as far as like economic news. It'll sway things one way or another. Then going into Christmas, and then we'll start the new year. So if you have any questions about investing, selling, we're still looking for stuff. We want to start. We have a certain number we want to hit next year for renovations. But if we can help you with Carrie and the retail team or on the investment side, let us know. We are thinking about putting out some of our spreadsheets and construction sheets that we use to maybe help some people, especially if you're looking in Jacksonville. If that's interesting, let us know. I don't know if many people want to see it, but maybe if people do, we'll put it out there. But thanks for checking it out, and see you next week.